You might have just finished a conversation and meeting with your restaurant coach and decided about what concept you wanted for your restaurant, who your customer avatar is or ideal customer is. Now you've gone about the process of hiring an interior designer, architect, kitchen consultant, etc., to get them together. And from this, you've got two budgets or two concepts, you know, the wish list one, the ideal one, and you've got the one you could fit in within your budget. You've got next situation is how do you approach it? It'd be nice to have the ideal restaurant, one you want, but there's a shortfall there. Maybe it should be in consideration. If you do decide to go the high road, there's an expense involved. Now, if you haven't got the cash, you've got to borrow the money. So there's advantages of using cash and borrowing or leasing equipment or paying for it straight at cash way. You've got the money, you pay cash, but it may not be the best way of doing it. When you lease it, it gets pretty expensive. Most leasing costs are high. You may have a good record with your bank and get a better rate. So whatever the rate is, you've got to do your maths. Sit down with your accountant and your restaurant coach to work out the best course. You must bear in mind that these leasing expenses are expenses which obviously come off your sales and profit, reduces your tax. On the other hand, if you buy it, you've got depreciation, rebates, or depreciation write-offs on your profit and loss account. Why are they important? Well, basically, every year you've got your leasing costs. You obviously comes off your bottom line. Your taxable income is lower. Depreciation, and every year you get a deduction, which is treated like an income when you look at selling the business. So you must sit with your accountant to work at the best bottom line. They will work out leasing expenses worthwhile leasing it, or if it's worthwhile, got the money to buy it outright. So I know that in profit and loss accounts, when it comes to selling, your income increases or your net income profit is higher because of the way the depreciation is treated in your profit and loss account. So I would discuss this with the accountant, see what would work better for you in your circumstances. Make sure you don't go overboard to spend too much money. You may have yourself in trouble down the track.